Hi, welcome to the Hawaii Real Estate Report. I'm Scott Sakata.
I'm Jeff Orig.
Today our guest we have Tony Diaz of VA Loans Hawaii.
Tony, welcome to the show.
Thank you very much for having me.
Can you tell us a little bit about yourself and your company?
Sure. I'm originally from Waianae. I call it God's country because it's so beautiful out there. My father joined the Marine Corps when I was 2 years old, and he served 25 years in the Marine Corps. And then I joined the Marine Corps after graduating from Kalahel High School, 4 years. And then I got into a bunch of different businesses and finally into the mortgage industry. And 4.5 years ago, I created VA Loans Hawaii, an educational company, to educate veterans about their VA home loan benefit.
Oh, wow.
Yeah.
So what is a VA loan?
What is a VA loan? It's a government loan that allows veterans to be able to finance 100% of the value of a property purchase. Yeah.
So what's considered a veteran then?
Who's eligible for
Yeah.
a loan? Well, anyone who served in the Army, the Navy, the Air Force, Marine Corps, Coast Guard from September 15th, 1940 to present day, as long as they served a certain amount of time, they're eligible for the loan. Now, just being eligible for it doesn't mean that you're approved for the loan, but those people would be eligible. Those are the people. Reservists is one of the big things in Hawaii. A lot of reservists, they don't know that they're eligible because some of them that served prior to 1993, they weren't. And then in 1993, Congress activated all the reservists were eligible. So they all got entitlements as long as they served 6 years of reserve duty or got activated for 181 days of active duty.
So 6 years for reserves.
Yes.
Minimum 6 years reserve.
Minimum 6 years of reserve duty or called to active duty for 181 days during peacetime or 90 days during combat. So right now, the Gulf War is going on. It's been going on since August of 1990. And so any reservist that got called up to active duty for 90 days other than school would be eligible. Yeah.
So you mentioned, VA, anyone served in the military from 1940?
Yeah, September 15th, 1940.
40. Okay, so that's 60, 70 years ago.
Yeah,
right?
yeah.
But if someone's going to be applying for a VA loan, I mean, usually loans you need to pay back, so you need to be working or getting income.
True, you have to have some sort of income, retirement income, Social Security income, all counts, and you can't discriminate on age. So I did a loan for my uncle who served in the Air Force. He was 80 years old.
Really?
Yeah.
So he's using his benefits.
He used his VA benefit to refinance his condo. Yeah.
Oh, okay.
Yeah, it's an awesome benefit that a lot of people don't know about because in Hawaii, the problem that we had here in Hawaii is the loan limits were always down here, and the sales prices of houses are always up here. So what happened was a lot of veterans, if you had to buy a house for like $340,000 and the loan limit was $240,000, they had to put 25% of the down payment of the difference. So 25 grand. A lot of veterans don't have that kind of money, so they switch from a VA loan to an FHA loan. And what happens in time is that if you stop using something, people forget about it.
Yeah.
And that seems to be what has happened in our industry. Realtors, loan officers, veterans, all have forgotten how the benefit works or haven't kept up with how the benefit works. So it's a tremendous, tremendous benefit these days.
Can you tell us then, I guess, what more specifically about the benefit to the veterans then?
Sure. The first thing is that they're allowed to finance 100% up to the county limit in Honolulu, which is $700,000.
Oh, wow.
$700,000. 100% financing. And on the neighbor islands, it's $625,500, all the neighbor islands. So a veteran can finance up to 100%, including the funding fee, $700,000. Now, there's no mortgage insurance also. So you're financing over 80% with no mortgage insurance. Now, there is this thing called a funding fee, and I think we're going to talk about that a little bit later. And we'll get more into detail about that. But no mortgage insurance on a 100% financing. It's a great loan.
So then what are the requirements? Like, let's say to get that $700,000, you have to have income that matches the $700,000 and credit to? Certainly.
The credit issues are a little, in my opinion, is a little more lax than conventional because only in this standpoint. If a person has a 640 credit score, conventionally they're going to get hit hard for that FICO score. So they're going to have add-ons to the buy down the rate. Whereas a VA veteran, 640 or above, they get the same interest rate as anyone with 850.
Oh, really?
Yeah. So it's
wow.
yeah. So they get the same benefits that way, which is a remarkable thing. Now, credit, you got to qualify credit-wise, and you also have to budget. Now, VA loan or conventional loans and FHA loans, they have this thing called debt-to-income ratios, where VA doesn't necessarily have a debt-to-income ratio if you meet what's called 120% of the residual income. So a lot of active duty veterans, they get paid this thing called BAH, which is Basic Allowance for Housing, and it's tax-free. So the wonderful thing about BAH is you got tax-free money to be able to pay a mortgage that you get to write off the interest against your taxable income.
Wow.
Yeah, I think if more active duty people knew how valuable that benefit was, a lot of them would stay in, and some people would re-enlist, actually. Maybe you guys want to join.
We'll pause right here. We got to take a break. All right, Tony. So this the VA loan is an incredible program, and we were talking during the break about the benefit to the veterans. So a question that I had was, I guess, at what rank or what level or what pay scale would it make sense for maybe an active duty veteran or someone that's retired to, rather than rent, that they should buy? Well,
here in Oahu, there's two things I tell veterans that they should think about when they're here, especially active duty people, because they have two major concerns. The number one concern is, well, the price of houses here in Hawaii are high, in their opinion. Although if you look at the historical data, every 11 years, a single-family home almost doubles in value. So it's a great investment as long as you can ride out the wave. Right. So the second thing I tell them to think about is, how much is my mortgage? How much can I rent it out for when I have to move? And can I make up the difference? And if so, then buying a home makes sense. If you can't, then maybe renting is probably going to be your best option. So, but the valuable thing about buying a home, for instance, like an E5 married with a kid, their taxable income is like $2,500 a month, and their non-taxable income is like $3,000 something a month. So if they went out and got a mortgage and had interest of $1,800 a month, the difference is $700 a month times 12, $8,400 a year in income. If you make $8,400 a year in income, you don't pay taxes. So that person just became tax exempt in the wonderful United States of America.
Wow.
So, I mean, because I'm not familiar with the military, what's their average stay, you know, if someone gets stationed here?
The average stay is 3 years.
Okay.
That's normally what they get stationed here for. So that's the thing. I tell them, if you can't sell the property, the thing you have to think about is, can I buy it and sell it before I have to leave in 3 years? And the answer in this market is absolutely not. You're going to finance 100%. You're not going to make your money back. But the flip side of that is, can I buy it and rent it out later? Because that could become my means to an end. Right. For instance, you buy a house here in Hawaii, you hold on to it for 11 years. If it does nearly double in price, you sell it, buy something for cash in North Carolina.
Right.
So when you retire, you truly are retired.
Right.
The problem is right now they don't think about really what's going to happen when I retire, because if you don't buy a piece of property until you retire, you're really not going to retire, because the number one expense in America is housing. And my father's a perfect example. 25 years in the Marine Corps, he's renting and doesn't have anything to show for it. So that's another reason why we decided to create these seminars. One was the first time I ever did this briefing for 75 reservists. I realized how little they knew about it. Right. And then I started thinking back, when I was in the Marine Corps, how much did I know?
Right.
And it's like,
but you were young and
man, 21 years old, he goes in one ear and out the other, right? But the thing is, they need to know. And the problem with the briefings is it's mandatory, and you're not thinking about it. Right. But if it's not mandatory and you are coming there, you really are going to learn. And then once they hear how valuable it is, then it opens their mind up to home ownership, which is all we want them to do, is just start thinking about it
Right.
instead of waiting until after I retire and go, man, I wish I would have.
Yeah, exactly.
And if they do that, then I've done a bad job of educating them. So.
Because you just mentioned 3 years they're here. Do they always have an option to stay and extend, or is it an order where, okay, after 3 years you're done, or is it case by case?
It's very different from service to service. In the Marine Corps, it's pretty much 3 years and you're gone.
Oh, really?
In the Navy, if you're on a ship, sometimes your MOS allows you, that's their job, allows you to transfer from another to a different ship. My uncle, for instance, 25 years in the Navy, served 20 years here in Hawaii.
Oh.
So it's very different from services to services. But my dad, we got stationed in Hawaii 4 times in his enlistment. So if he would have bought it any one of those times
And then,
and kept it,
yeah.
he would have been set.
So you really got to think about that. I mean, $700,000 limit in Honolulu. They purchase something, and if they know they're going to be leaving in 3 years, and yeah, you really need to calculate if the rent's going to cover your mortgage. Because I always tell clients, if you can keep your property, keep it. Because Hawaii is a rare
Right.
case. You know, real estate in Hawaii is very valuable.
Right.
But like you said, if they leave after 3 years, and if the rent's not covering, the market rent's not going to be covering their mortgage, then wow.
Well,
Oh, go ahead.
there's really 2 things that I think is going to end up happening here in Oahu is one of the 2 things. We're either going to run out of land, and when that day happens, prices of homes are going to escalate, or we're going to run out of natural resources to be able to support the amount of people. So then the government will say, okay, no more building new stuff.
Yeah.
Either way,
Yeah,
the price of houses are going to skyrocket. And if you're not in the market, especially for local people, because they always tell me too in my seminars, Tony, the price of houses can't keep going up because we won't be able to afford it.
I will.
The economy doesn't care about demographics.
Yeah.
Yeah.
You know, in San Francisco, there's not too many native San Franciscoans, but you
Right.
can buy a Cracker Jack box for $1 million, right? So,
We're going to take a break right here.
okay.